real estate professional tax status. So what is real estate professional tax status? How do I qualify? Do I need to be a realtor? Do I need to be a loan originator? Do I need to be an appraiser? No. Okay. Anybody can become a real estate professional. Okay. Anybody can obtain this tax status. And I'm a real estate professional. I own a tax and accounting practice, but I continuously buy real estate every single year. In fact, I have to buy real estate every single year because the moment that I stop buying real estate every single year, that's when I get hit. That's when Uncle Sam started knocking at my door, but I understand the big incentive plan. I understand what to do in order to keep this machine going. And the first step is to create income. And the second step is for me to capture deductions that can fund my future. And the number one deduction that I love is real estate. So what's real estate professional tax status? So let me give you guys just a quick overview. So every United States taxpayer has a $25,000 special allowance that they can take from their rentals. Okay, they can take a loss of $25,000 to offset their taxable income. Now, once your income goes above $150,000, your CPA may say, unfortunately, Eugene, but you're not able to take those losses anymore. And they put those losses in a bucket. Okay, and you're not able to take those losses until you sell that property, right? But if we can qualify you to be taxed as a real estate professional, then you're not subject to that $150,000 income limit, or you're not subject to that $25,000 special allowance. You can take an unlimited amount of deductions. This is how the Donald Trumps of the world, these are how these folks are not paying any taxes because they're leveraging their real estate. Okay, even Joe Biden himself, who wants to take capital gains tax rate to 44%, is leveraging his real estate. Okay, so how do we qualify for real estate professional tax status? Well, all we have to do is meet some tests. That's it. They say, hey, Eugene, if you meet these tests, we can qualify you. So what are those tests? Okay, here's the test. If you materially participate, okay, in your rental activity for more than 750 hours or more in a year, okay, and more than 50% of your time and more than anyone else, you qualify.
So because this is an important one, because a lot of people ask this question, do I qualify? And we've got a lot of wholesalers, we've got flippers, we've got burst strategies, we got buy and holds, we got renters, landlords, we got short-term rentals, people on the deal, which short-term rentals has a loophole we'll discuss, and you'll discuss in a minute, but count 750 hours. Does that include if I'm out bird dogging properties or online searching for properties or driving by properties or touring neighborhoods or touring properties? Is that included in that 750?
Great question. No, it is not. Okay, so a lot of people think that commuting back and forth, to the property is time that you can allocate towards your rental, your material participation. Okay, we actually had a client who, unfortunately, they got their cost seg disallowed because they were counting in those hours. Okay, so I'm telling you from experience, from us talking back and forth to the revenue officer. So what counts? Okay, so it's 750 hours. Okay, materially participating, meaning that you're physically at the property. Okay, you're physically at the property. You're meeting with a contractor. You're picking up rent from your tenants. You may be decorating your Airbnb, your short-term rental. Okay, you're having meetings there. You're physically at the property, materially participating in the operation. Okay, you're screening tenants, right? And you have to spend more than 50% of your time, meaning that if you have a property management company, typically that's when things get a little dicey.
Sure.
Because if you have a property management company, how are you spending more than 50% of your time and more than anyone else in that deal? Okay, so we got to be real careful with tracking our hours and making sure that we're hitting things that actually helps. Now, what I recommend to track your hours is Reps Tracker. Okay, Reps Tracker. I always tell my clients all the time, anything that we deduct, we need to have supporting documentation to be able to back it up. Reps Tracker, you can download the app on your phone, and every time you go to the property, you can literally track and log your time. Oh, I went to 751 South Greenwood Avenue today, and I did X, Y, Z. And you can even take a photo while you're there. Okay, so we have substantial proof in the event where a revenue officer or you get a letter, we're ready to roll, we're locked in.
Reps Tracker is available, I'm sure, on the Apple Store.
Yeah,
great.
Yeah. Now, to a lot of folks, they're like, hey man, how am I going to do this? Okay, how am I going to hit the 750 hours where there's always, if there's a will, there's a way. And I love the IRS because there's always somebody there that says, hey, look, we need to figure this out. We need to come up with a way to make this happen. So what do? They said, hey, there's this new thing called Airbnb, okay, VRBO, booking.com, where people are coming in and they're traveling and they're staying for an average of 7 days or less. All we got to do is meet the 100-hour material participation test now. So would I rather do 750 or would I rather do 100 hours? It's clear as day. We can do the 100 hours, okay? And with real estate professional tax status, you only need to qualify for the tax year that you're taking the deduction. Okay, so we've had clients that will do a short-term rental so that we can do the cost tag, we log their hours, and then maybe for the next year, they don't have the Airbnb no more. They turn it into a long-term rental. Okay, so we have different scenarios where we can talk about what makes sense for you. But one thing I want to stress upon before we move past this slide is we never buy real estate solely for a tax deduction. I have some clients that have significant income where they're just like, look, I just need to buy something for the write-off, right? We're not buying anything just for the write-off because remember, as you guys know, especially if you're working with the hard money code, that when you go out there and you buy, you're buying what the numbers say on paper. That's it. That's all we're buying. So many people get caught up in the amount of bedrooms and the amount of bathrooms. No, you're buying what the numbers say. That's it. And if the numbers make sense, we do the deal. If the numbers don't make sense, we don't do the deal. Hell, you run from the deal.